But if you didn't understand the company, if you're just buying on the fact the stock had gone from 26 to 16 and then it got to 10, what would you do when it went to 9? What would you do when it went to 8? What would you do when it went to 7? This is the problem that people have, is they sell stocks because they didn't know why they bought it, then it went down, and they don't know what to do now. Do you flip a coin? Do you walk around the block? What do you do?
本日は伝説のファンドマネージャーと謳われるピーター・リンチのレクチャーについてご紹介したいと思います。ピーター・リンチは正しい投資方法を学べば個人投資家でも機関投資家に負けないリターンを出せると言っています。特にマーケットがクラッシュした時にチャンスがあると言っているのです。ピーター・リンチはフィデリティ・インベストメンツのファンドマネージャーとしてマゼランファンドを運用していました。1977年から1990年の間に平均29.2% の年間リターンを叩き出しています。マゼランファンドは当初18ミリオン US ドル、日本円にしておよそ20億円でスタートしましたが、ピーター・リンチがファンドを担当した13年で14ビリオン US ドル、日本円にしておよそ1兆5000億円まで運用資産が膨らみました。マゼランファンドを世界最高の投資信託ファンドに押し上げたのです。歴史は繰り返さない、しかし時に韻を踏むとはマークトゥインの有名な言葉ですが、長い時間が経った今でもピーター・リンチの考え方は非常に示唆に富んでおり、現状の市場の中でも役に立つコメントがたくさんあります。コメディのようなピーター・リンチのレクチャーです。ぜひお楽しみください。
The single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. I made money in Dunkin' Donuts. I can understand it. When there was recessions, I didn't have to worry about what was happening. I could go there and people were still there. I didn't have to worry about low-priced Korean imports. I mean, I just didn't have, I can understand it. And you laugh, I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle. The public does terrible investing, and they say they don't have a chance. It's because that's the way they're acting. I'm trying to convince people there is a method. There are reasons for stocks that go up. Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. And first of all, they try and predict the stock market. That is a total waste of time. No one can predict the stock market. They try to predict the interest rates. I mean, if anyone would predict interest rates right 3 times in a row, they'd be a billionaire. Considering there's not that many billionaires on the planet, it's very, I had logic, so I had a syllogism and studied these when I was at Boston College. There can't be that many people that can predict interest rates because there'd be lots of billionaires. And no one can predict the economy. I had a lot of people in this room were around in 1981 and 82 when we had a 20% prime rate with double-digit inflation, double-digit unemployment. I don't remember anybody telling me in 1981 about it. I studied all this stuff. I don't remember anybody telling me we had the worst recession since the Depression. So what I'm trying to tell you, it'd be very useful to know what the stock market is going to do. It'd be terrific to know that the Dow Jones average a year from now would be X, that we're going to have a full-scale recession, our interest rate's going to be 12%. That's useful stuff. You never know it, though. You just don't get to learn it. So I've always said, if you spend 14 minutes a year in economics, you've wasted 12 minutes. And I really believe that. Now, I have to be fair. I'm talking about economics in the broad scale, predicting the downturn for next year, or the upturn, or M1 and M2, 3B, and all these M's. I'm talking about economics. To me, is when you talk about scrap prices. When I own auto stocks, I want to know what's happening to used car prices. When used car prices are going up, it's a very good indicator. When I own hotel stocks, I want to know hotel occupancies. When I own chemical stocks, I want to know what's happening to the price of ethylene. These are facts. If aluminum inventories go down 5 straight months, that's relevant. I can deal with that. Home affordability, I want to know about when I own Fannie Mae or I own a housing stock. These are facts. They're economic facts and there's economic predictions. And economic predictions are a total waste. And interest rates, Alan Greenspan's a very honest guy. He would tell you that he can't predict interest rates. He could tell you what short rates are going to do in the next 6 months. Try and stick him on what the long-term rate will be 3 years from now. He'll say, I don't have any idea. So how are you, the investor, supposed to predict interest rates if the head of the Federal Reserve can't do it? So I think that's, but you should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means, that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet, and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own. So I think that's the key to element. Is a lot of times people buy on the basis the stock has gone down this much. How much further can it go down? I remember when Polaroid went from 130 to 100. People said, "Here's this great company, great record. If it ever gets below 100, just buy every share." And it did get below 100. A lot of people bought on that basis, saying, "Look, it's gone from 135 to 100. It's now 95. What a buy!" Within a year, it was 18. And this is a company with no debt. I mean, this is a company that was just so overpriced, it went down. I did the same thing in my, I think my first or second year of Fidelity. Kaiser Industries had gone from $26 a share to 16. I said, how much lower can it go? It's 16. So I think we bought one of the biggest blocks ever on the American Stock Exchange of Kaiser Industries at 14. I said, it's gone from 26 to 16. How much lower can it go? Well, at 10, I called my mother and said, Mom, you got to look at this Kaiser Industries. I mean, how much lower can it go? It's gone from 26 to 10. Well, it went to 6, it went to 5, it went to 4, it went to 3. And now I am fortunate it's happened rapidly, or I would probably be still caddying or working at the Stop and Shop, but it happened fast. I was able to, it was compressed. And at 3, I figured out, there's something very wrong here, because Kaiser Industries owns 40% of Kaiser Steel, they own 40% of Kaiser Aluminum, they own 32% of Kaiser Cement, they own Kaiser Broadcasting, they own Kaiser Sand & Gravel, Kaiser Engineers, they own Jeep, they own business after business, and they had no debt. Now, I learned this very early. This might be a breakthrough for some people. It's very hard to go bankrupt if you don't have any debt. It's tricky. Some people can approach that. It's a real achievement. But they had no debt, and the whole company at 3 was selling at about $75 million. At that point, it was equal to buying one Boeing 747. I said, there's something wrong with this company selling for $75 million. I was a little premature at 16, but I said, everything's fine, and eventually this will work out. And what they did is they gave away all their shares to their shareholders. They passed out shares in Kaiser Cement, they passed out shares in Kaiser Aluminum, they passed out their public shares in Kaiser Steel, they sold all the other businesses, and you get about $50 a share. But if you didn't understand the company, if you're just buying on the fact the stock had gone from 26 to 16, and then it got to 10, what would you do when it went to 9? What would you do when it went to 8? What would you do when it went to 7? This is the problem that people have, is they sell stocks because they didn't know why they bought it, then it went down, and they don't know what to do now. Do you flip a coin? Do you walk around the block? What do you do? Psychiatrists haven't worked so far. I've never seen them running in. The psychological psychiatry fund I've never seen was for with the SEC to make it through as a mutual fund. So they haven't seemed to help. I've tried prayer. That hasn't worked. So if you don't understand the company, you have this problem when they go down. Eventually, they always come back. This one doesn't work either. People think RCA just about got back to its 1929 high when General Electric took it over. A lot of double nits never came back. Remember those beauties? Floppy disks, Western Union. The list goes on and on. People saying it'll come back. Well, it doesn't have to come back. And in fact, short sellers, people that really make money in stocks, they don't short Walmart, they don't short Home Depot, they don't short the great companies, Johnson & Johnson. They short stocks down from 80 to 7. They'd like to short it at 16 or 22, but they figured out at 7 that this company is going to go to 0. They just haven't blown taps on this thing yet. It's going to 0. And they're selling short 7, they're selling short at 6, at 5, at 4, at 3, at 2, at 1 1/4. And you know to sell something short, you need a buyer. Somebody has to buy the damn thing. And you wonder, who's buying this thing? It's these people saying it's 3. How much lower can it go? You know, the important thing is you can't get too attached to a stock. You have to understand there's a company behind it. You can't treat this like your grandchildren. You know, you have to deal with the stock and say, I understand the company, and if it deteriorates, if the fundamentals slip, you have to say goodbye to it. If one rule you want to remember is, the stock does not know you own it. This is a breakthrough. So don't get, you have to understand it and say, they're doing well, and as long as they keep doing well, my best stocks have been my 5th, 6th, 7th year I own them, not my 5th, 6th, 7th day. So you have to understand that and stay with it. And the key organ in your body in the stock market is your stomach. It's not the brain. If you can add 8 and 8 and get reasonably close to 16, that's the only level of math you need to know. You don't need the area under the curve. Remember that quadratic equation and an integral calculus and the area under the curve? I mean, whoever cared what was under the damn curve? I mean, but you had to study this. You don't need this in the stock market. So all you have to know is you're going to see it's always going to be scary. There's going to be always something to worry about. And you just have to forget all about it. Cut it all out and own good companies or own turnarounds. Study them and you'll do well. And that's all there is. And I'm ready for questions. I spend 0 time thinking about what's happening down here in Washington. And I spend little time thinking what's going on in Russia or China. I just deal with facts. When the economy's going down, when the economy's going the wrong way, I can deal with that. This whole health care reform bill drove a lot of drug stocks down to low levels. And I could say to myself, well, 60% of Johnson & Johnson's earnings are outside the United States. Their pharmaceutical drug business is all on patent. Nothing's coming off patent. They only have 5% of sales from one product, which is Tylenol, which is already an over-the-counter drug and it's growing overseas. I says, why is this stock gone from 58 to 36? And these companies are already dealing in Japan and overseas with they already have the government controlling pharmaceutical prices. They've dealt with it. So I deal with facts. They might, this year, I thought it was very likely you'd have a bill passed on health care. It didn't happen. They drove the stocks down, but I think the stocks would have rebounded anyway, even if the health care bill was passed. So I don't deal with what's happening in Congress or what's going to happen in the future. I just deal with what's happening in the economy and what's happening in the companies I call.
Are you concerned about the volatility in the financial markets today? Do you think something needs to be done to reduce it?
I love volatility. I remember when in 1972 the market went from down dramatically, and Taco Bell went from 14 to 1. They had no debt. They never had a restaurant close, and I started buying at 7, but I kept onto it, and it went to 1. And it was the largest position in Magellan in 1978 when it was bought out by $42 by Pepsi-Cola. And I think it would have gone to 400 if they'd buy it out. I think volatility is terrific. I think I think these callers are very important. I don't think the market going up 80 points one day and down 80 the next is a good thing for the public. I think that's not a very good thing. But I think all these callers and all these other things, to keep the volatility down each day is important. But the market's going to go up and down. Well, human nature hasn't changed a lot in 25,000 years. And some event will come out of left field, and the market will go down or the market will go up. So volatility will occur. Markets will continue to have these ups and downs. I think that's a great opportunity if people can understand what they own. If they don't understand what they own, they can own mutual funds, try and figure out what mutual funds they own, and keep adding to it. Basically, corporate profits have grown about 8% a year historically. So corporate profits double about every 9 years. The stock market ought to double about every 9 years. So I think the next market's about 3,800 today, 3,700. I'm pretty convinced the next 3,800 points will be up. It won't be down. The next 500 points, the next 600 points, I don't know which way they're going. So the market ought to double in the next 8 or 9 years. It ought to double again in the 8 or 9 years after that. Because profits will go up 8% a year, and stocks will follow. That's all there is to it.